Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, so we've been talking about band rides and being in dip buy mode. The band ride has begun, and it continues today. Well, I want to go the other way. Let's go the other way. So you can see we engaged the upper band back on Thursday. Here's Friday. Here's Globex today. So we are in a band ride. That keeps us in buy the dip mode. Your Bollinger Bandwidth is at 4.62. The bands are never super tight, but as long as they continue to progress, these dips are going to get bought and they're going to walk the market higher. How does that look on an hourly chart? It looks like a bunch of hourly mid-band support. They tried to convert it here, but they could barely close below it, and then they took it right back into the end of the day. So ultimately, it's still support, and it's trying to be support right now. So a bunch of higher highs, higher lows, hourly mid-band. They compress, we go up. Compress, we go up. It's been very orderly. You can see the new weekly pivot at 27.0425. And I mentioned in the writing that I put on the daily chart, the bears are irrelevant above the weekly pivot. It's just noise. We can trade it. We can be short. We can make handles short, but it's just a trade. It is just a trade. It is not. It is not a sustainable position because all these little pullbacks keep getting bought, and as long as that's the case, then you're going to see higher prices. You're going to see the band ride continue. You're going to see dips get bought. You're going to see higher highs, and I was talking to the room on Friday. Friday was a pretty straightforward day. Got long at 24. We actually got a decent short at 28 for the pullback that they did do, and then it was basically Friday. So we wrapped up a really solid week in the room at about 74, a little over 74 handles. Which puts us at a little under 170 handles for May, and it's the 14th, so I'm happy about that. So what's going to be happening here is we're probably headed to 50. We talked about 50 as far back as Wednesday. It's 50 is just one of those things where when the market gets rolling, especially on an upper band ride, going and printing that 50, which is an old pre-FOMC level, seems fairly reasonable. We've done 41, and unless they can take out the weekly pivot, these higher lows and higher highs are going to head toward 50. Now, beyond 50, you start to take a look at. We had this area here, which is 44. That's from March 21st. Then you have the areas where it failed. 05 quarter, 07 quarter. You have this high here at 56 half. But, the other thing I've mentioned in the room is you go much further, you start to get into blue sky. You've got blue sky from 57 up to, 28, 2804, 2805. So the best way the bears can try to turn the tide in the other direction is to spend a day not engaged with the upper band and then break the prior day low. If you can do that, then you can get some momentum and you can head back to the middle band, and we continue to play our, upper band, middle band, lower band, middle band, upper band, middle band, lower band, middle band, upper band, right? If you want to go back to the middle band, very doable, then you have to end the band ride, and that's how you do it. Do not engage the yellow line for an entire Globex session, break the prior day low, have some follow through, and then we're headed back to the middle band. Otherwise, we're going to get in a band ride that is going to lift us here for the majority of the week. All right, take care. I'll be out with middays with wrap-ups. Trade them well, and I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.